Welcome back. The markets have settled after the initial jigs, and it's a mild red tick, very mild, flat markets actually, as far as the index is concerned. And the mid-caps are continuing their outperformance for the moment with 0.33% in terms of gains. Well, since they've settled, let's look for some more medium-term and longer-term perspective, and let's welcome our market master for the day. Sandeep Bhatia, Executive Director and Head of Sales at Kotak Institutional Equities, joins us now. Good morning, Sandeep. Good to have you with us. Well, markets are finding a new level of consolidation between 8350 and 8400, or more broadly 83 and 8400. What's the sense you're getting? This is just a temporary consolidation, and we should see a series of market climbs up until budget, perhaps?
Yes, I think expectations and delivery both are very high. We are going to start the winter session by 24th, which is next Monday. And then what we will definitely want to see is the insurance bill. We'll see the GST bill being tabled. So these are some very important legislations which are expected. Yesterday we saw the announcement of the final blockage to the passing of the Bali Trade Pact being announced. The US has agreed to India's stockpiling of food. I think this is a very positive message that the international community is getting from India. There was indeed a lot of criticism which happened when this trade pact was seen to be failing in the first couple of months that the new government took power. But now we have seen that India's interests are being protected, and we are now seeing the entire trade pact again come back on the table. So clearly these are important developments on the economic side, and also we'll have two big elections take place, one in Jharkhand and the other in J&K. I think in Jharkhand, BJP is probably most likely to be the largest party. And even in J&K, there are expectations that BJP will be the single largest party. So these are very big political developments. I think for the first time we see a government which is actually winning elections and focused on winning elections after the big national election win. So it's not that election wins are stopping. The strategy is very clear that the only way to drive reform in this country is to continue to win elections, continue to be in charge of the political narrative. And only when the government is in charge of the political narrative that the economic narrative will fall into place. And that's what we are seeing happening. So that's a good thing for the markets. That's a good thing for the economy. Also, we will see expectations continue to build up of a rate cut. I would expect by the first quarter of next calendar year, by March 2015, we would see at least maybe a 75 basis point rate cut come through. So there is definitely that also happening in the background. All this is good news for the market.
Okay.
Wow, that's an optimistic note at which you started, Sandeep. Hi, good morning. So is this a market that one should buy now, or should you wait for the passage of some of these, reforms like the insurance bill, GST, etc., before taking the next call in the market?
So I think legislation which is being tabled is definitely one big trigger in terms of market expectations and whether these expectations are getting met. So that is just, that would be an intraday trigger, but I think anyone who's looking at the 3 to 5 year time frame should continue to monitor how this government moves both on the political and on the economic side. I think there is too much focus on whether this announcement happened or whether this announcement did not happen. I think in India we have seen that the economic reform process always gets derailed when the politics gets out of control. We saw that in the Narasimha Rao government. We saw that happening with the last UPA government in the second term when it started losing grip of the political narrative, that everything else came to a grinding halt. So I would think that as long as the politics continues to be in favor and falls in line, that the economic reform will continue. I think even if you see on the labor reform front, things have started moving, and very clearly, instead of making any big bang announcements which would result in galvanizing a political opposition across the broad spectrum of political opposition that this government actually faces, it is happening at the state level. So all this is extremely important, and I think that the way this is driven is actually shows a very intelligent planning and execution which is happening.
Okay, we want to quickly get to your stocks and sectors and your analysis of earnings as well, Sandeep. So time permitting, I'll come back to the macro question again. How did you look at the earnings so far? I mean, we are almost through with 95 or 98% of the earnings this season. Are you getting a sense that we have at least bottomed out in your own house? Are there more upgrades than downgrades?
So as far as the earnings trajectory is concerned, yes, we have bottomed out. Yes, we are seeing some upgrades, but these upgrades are more in the FY16 and FY17 realm. Okay. So when an analyst looks at FY16 and FY17 to upgrade his numbers, he's basically in a way trying to catch up with market prices and expectations. And clearly, right now, I've been talking to a lot of companies. Right now, the momentum is still very slow. I don't think we will see a big earnings upgrade come through in the second half also of this financial year. So if FY16, FY17, where the earnings growth trajectory is going to play out, when it does, so clearly there is that element that there is expectations, and to an extent market continues to price that in, and that's what's happening. So no big earnings revisions right now, to answer your question.
So which are the sectors which have surprised you on the upside this earnings season, Sandeep, where you would advise accumulation now?
So there have not been any big surprises. I think earnings have met expectations broadly for autos, pharma. Even for consumer, earnings trajectory has been not very strong, but they have met expectations. They have not belied expectations. So that's where most of the earnings are broadly in line. In terms of where I would continue to invest, it would primarily be in terms of investing in interest rate sensitives. So banking sector, where NPAs have been probably stable for large banks, but in some particular cases they are still rising. I think the banking sector is where continued investments can take place, and in the pharma and the auto sector. That's where I would
banking, pharma, auto. That's a good mix of defensive and cyclical, I must say. But if you can give us a little more color on the financial sector itself. First, if that 75 basis cut by 2015, I haven't heard too many people being that aggressive. If that were not to come, would you be a little worried about the sector? More importantly, what do you like in this sector? NBFCs, private banks, state-owned banks, big state-owned banks, small state-owned banks?
So we like State Bank of India. We like ICICI Bank. These are two large banking sector participants which are not expensive. So these are, I would say easy to point to. But in the private sector space, there's IndusInd Bank, there's ING Vaishya, which are also at very good reasonable valuations, and there is organic growth story which is coming through in both these banks. So we like that. In the NBFC sector, we like Bajaj Finance. It's a very, very entrenched consumer lending play with a very aggressive, smart management. And in fact, in the next couple of next 18 months, I would expect consumption to continue to pick up, and that would be something that will definitely benefit Bajaj Finance. So these are some of the names that we like in the banking and non-banking space.
What about the auto and auto ancillary sector, Sandeep? What are your top choices there?
For the auto sector, we like Ashok Leyland. The CV cycle has started to turn. It's still not a major turn. I would think in the next 2 to 3 years, we will see a significant ramp up in terms of CV vehicle sales. Tata Motors is also a story which builds into the CV vehicle cycle, but it's also Tata Motors also owns Jaguar Land Rover, which continues to do well. On your channel, I have come for the last 2 years. We've been talking about Tata Motors and how the Jaguar business is turning around. I expect that to continue momentum. In fact, the launch of the small Jag, which is going to happen, which has been announced and is going to happen in the next calendar year, will significantly scale up the business. and make it closer to a full-fledged luxury car maker. So clearly there is a lot of things happening in Tata Motors, in addition to the fact that the domestic CV cycle will recover. If we see the passenger vehicle business, the cars business in India recover, which I think it's still some time away, that would be a cherry on the top. But Tata Motors and Ashok Leyland and also Maruti Suzuki, of course the stock has done very well, but I would expect Maruti Suzuki to actually expand margins going in the next 18 months, and volumes will significantly surprise, especially if rate cuts continue, as I expect.
Okay. Well, we'll come back to stocks in a second, Sandeep. You know, you pointed out that most of the analysts are upgrading FY16, FY17 earnings. Now, if, say, the budget was not up to speed, or if you don't see an actual bunch of earnings upgrade at the end of the fourth quarter, that is, say, by April, do you think the rush of FI investments could get disturbed? Some analysts have told us that the latest money that's come in could actually turn back.
Lata, I think first we have to be clear about what our budget expectations are. The budget expectations, which most people talk about, is primarily cut in taxes. So do I expect a cut in taxes? I don't think we should expect a cut in taxes. If we see the last time the NDA was in power, we actually saw the process of fiscal consolidation happen. And that is where in 2004 the UPA Part 1 actually took off, with global liquidity and global economy expanding from 2004 to 2007, and India was in a very good fiscal place. I think India needs to build its fiscal strength, and I don't expect any big tax cuts. What I do expect is incrementally an environment of clear, transparent decision-making taking place. If you talk to business leaders, what they will tell you is that right now the thrust is on cleaning up the entire process of government decision-making to make it extremely transparent, to the extent that some people say that now we do not need a Delhi liaison office to lobby with the government. If you are falling within the parameters of policy, even if you put an email and you ask what the status of your projects or your approvals are, you would get a response. And that is something which is unheard of in India, where everything works by lobbying and by having a Delhi liaison person. I think if this is what we put in place and execute over the next couple of years, it basically really improves the environment for business, environment for investments, and this is more important than any big bang tax announcements. This is actually the real issue, is that I don't think most people understand what the agenda of this government is, or what the longer-term thought process is. As I see it, it is attacking the entire political economy structure which has built in place over the last so many decades. So if you actually do that and clean that up, you really create a ground for sustained growth, and that's what's more important.
Okay, just one final question then, Sandeep. The mid-caps have outperformed this month and this year. You spoke about your preference towards names like Ashok Leyland, but could you throw more color or elaborate on what are your mid-cap preferences in spaces like consumer, etc.?
So we like Glenmark Pharma. This is a business which is doing very well in India. It will show you 18 to 20% kind of top line growth for the India business for the next 2 years. And in its pipeline, we see in Europe and in the Americas strong growth coming through. This is therefore one business that has consistently performed the last 1 year and will continue to deliver over the next 2 years. So that's one name which is definitely very interesting. Bajaj Finance is another mid-cap play which I briefly touched upon. It's going to benefit from higher consumption spends which are coming through in the economy, and also falling interest rates for 2015 and 2014 and 15 onwards. So this is clearly something which looks interesting. The other names which look interesting at current levels is Asian Paints. Asian Paints is a business which basically plays into both higher consumption spending and also benefits from increase in volumes of new houses bought. With lower interest rates, that will also play into Asian Paints' favor. And the other thing which is happening, and the raw material costs are coming down, as most of the raw materials are petrochemical and crude oil based, and therefore that's also helping margins. So these are some of the names that we like in the mid-cap space.
All right, we could go on with this because there are plenty of mid-caps that are attracting the market's attention. Sandeep Bhatia, it was a pleasure listening to you. Thank you very much for joining us today.